Good evening, folks. How are you? Makarimaka, and welcome to the India Market Review for 2nd August 2026, Sunday. I hope the last one you watched last week was successful, profitable, and insightful. And I'm just going to hope that this is just a very quick review of the last week, right? So here we go. Yes, I'm fully aware that you are looking at the BBC website on your screen right now. And before I come to that, let me just start by saying that this is not financial advice. Upfront disclaimer, any investment or trading decisions that you make are entirely at your risk. This is only for educational and information purposes. And along with the India market review, we do other reviews on global markets, on bullion, on Forex, some very interesting moves in Forex in the last 3 days on the on the Japanese yen. Please read up about it. Or if you are on our WhatsApp group, you would have gotten updates on that. Interesting stuff happening in bullion. There may be something that is building up. Not right, it's like when setups ripen, they're not right now ripe, but yeah, getting there on the bullion side. And then we also do reviews on global energy, agricultural listed commodities, and anything industrial metals, industrial products, etc. We've got extensive databases for that. All right. And before continuing, just to note the time, and it's just past 4 p.m. India Standard Time, and that is important. And that brings me back to Mr. Trump, which is that he has said, after being very belligerent in the last 2, 3 days, that he's going to bomb the hell out of Iran. He said that many times, I know. And now he says he's going to cancel the Iranian strike, subject to deal being made rapidly, whatever that means. And that has implications, obviously, for the market, right? So, I mean, I'm noting the time and I'm noting this event and all that because by the time you watch this or tomorrow, 24 hours, 48 hours, Trump may say something else and the world could be at a very different situation. So things, as you know, change hour to hour or day by day for sure. And so there's very little um, thing that you can actually hold on to and say, oh, okay, fine, this is old. So you just have to keep reacting literally on the fly nowadays. All right. So having said that, with this as the background, we jump into the market review. Well, okay, you're seeing the NASDAQ India index. And as you can see, the NASDAQ India index has done very well last week. So they're actually, 1 week, such a long time in the markets. Why 1 week? 1 day is a very long time in the markets. And we've got big moves that were happening. And just to, make the point about those moves, if you can believe it, where my cursor is right now is where the market was when I did the webinar last week, right? And that's what you saw. And we spoke about quite a few sectors, and we're going to review that. And after the market being here at around 23,650, 23,750, we are today at 24,400 almost, right? So about a 700 or even a, almost 1,000 point rise if you walk from the lows is what has almost happened, and all in the last 5 days, in the last 1 week. So a very different, I would say, emotion, at least in the market, a very different sentiment for sure in the market from something which was quite bearish or potentially bearish last week to now potentially looking quite bullish on the index itself, right? Of course, this was before the Trump news came out, and that should add fuel to the rally, with the market probably rising more, and who knows, even a gap up on Monday morning in another about 15, 16 hours. India markets I'm talking about, and well, you can already look at what may be happening in Japan or South Korea, etc., and see and get cues from there. But anyhow, so the Nifty very nicely at a very sweet spot, just at the 200-day exponential moving average. Just a difference of literally 3 points between, or 3 or 4 points between the 200-day moving average and where the Nifty has closed. And Monday could be, next week could be a pretty nice move where the market goes to 24,600 or even higher, right? As you will see in a little while, some of the sector indices are set up very well, have been making even some fresh life highs. And except for the laggards, which are basically dragging the Nifty down at this point, basically the principal one perhaps being Reliance Industries, everything else is actually looking quite positive right now. So those are the opening comments on today's IMR. Let me see if I can keep it shorter than last week's IMR for the benefit of everyone and keep it as precise as I can. Very quickly, not that this is head and shoulder, but hey, why not? Uh, Left head, uh, double head and shoulder, and a double right head. Okay, a head and shoulder inside, a head and shoulder sort of. But this is an invalid pattern simply because there is no preceding trend to it. So though it may look like a head and shoulder, it's not a head and shoulder. It does not really have the measuring implications that a classical head and shoulder would have. All right, so that's one big shift in last 1 week, the sentiment of the Indian markets and indeed the global markets. Looking at what happened on the DXY, which is also related to what I mentioned earlier about the uh, Japanese yen drama that has happened in the last 4 days. I'm not going to cover that here. Please have a look at it. The dollar index has corrected from 101.5 to below 100, and all in a matter of 3 days. This was because of the intervention by the Fed and the Bank of Japan in the forex markets globally, nothing to do with India. And the Indian rupee marginally strengthened because of that from 96.50 to 95.40. Right? These are events you cannot see forthcoming. What I had mentioned in the previous IMR is that the Indian rupee is likely to set to make a new life low, which did not happen. And the intervention came up from the Fed. These are just things that happen in the market. Everything is a probability. But still, technically speaking, do not be surprised if the Indian rupee reverses course and then we head higher. Probably take more time than perhaps initially, but the technical setup is very clearly that we are heading towards life lows on the Indian rupee. Just that corrections are happening, and it's probably definitely going to take more time. All right. Now, having said that, before I get into a proper sectoral review, or rather the same sequence, let me just jump into what matters perhaps most and what is of interest to most people on today's webinar, which is the CNX IT, which was the highlight index that we spoke about last week and sent out, just market updates in the rest of the week. If you're on our WhatsApp group, you would have received them. And the CNX IT, I mean, this is sweet. I mean, in the sense that this is what technical analysts just really love to see. And that is the fact that how technical analysis just sometimes, just the textbook perfection of it, literally. So why am I saying this? Because this is the CNX IT index, and the CNX IT index last week, as we had suggested, is very likely to go up. It did go up, went up in leaps and bounds, literally with gaps, and then went to the 200-day moving average, literally, went to the 200-day moving average and corrected from that, right? Not that the rally is over. The rally is probably definitely still in place. That's the view. But this technical setup, the way it moved from moving average to moving average and then took a resistance and retraced from that is just, if you were a short-term trader, or if you are a short-term trader, these were beautiful trades that one could have easily taken. Nothing complex, no fancy stuff. It's just textbook classical technical analysis, Dow theory, which has been there for like literally more than 50 years, almost close to 100 years. The finer points have come up in the 30, 40 last years, right? But this is just textbook. And going to a moving average, retracing from that, or taking support on that, as you saw on this Tuesday. And then, the next move is being set up for a higher move. And that higher move, very likely, as far as CNX IT is concerned, is, well, let's see. Let me zoom out and let me go to my weekly chart. Uh, Gets less noise, more clarity. Right, sorry about that. And well, I'm thinking 32,300 on the CNX IT is very much on the cards, and that would make it almost what, about 1,500 points up from here, and that's about a 5% move that we are talking about on the CNX IT. And don't be surprised, a 5% move is a very good move, and for a trader, that's a lot of opportunity. And if you are an investor and you had been tracking this or you've been watching the IMRs, then perhaps you even gotten at around 27,500. You're already about 10% up on the index, and more, another 5% minimum is very likely, right? So the CNX IT, and you'll see similar textbook classical patterns on individual IT stocks. I'm not covering individual stocks in the uh, in the public reviews, regulatory reasons, but yeah, this is something that again, like I said in the previous IMR, if you're an avid technical analyst and you follow, lots to learn from the markets in the current setup, right? So this is what CNX IT did. The other thing that I want to highlight is reality, because that's also, and that was our call a month back. If you watched our webinar that we did at the end of June, uh, not July, at the end of June, we are in August now, and you looked at that, that's also going up again in a textbook fashion. As a matter of fact, maybe an Elliott Wave 3 of a smaller degree is in place, and that has a long way to go before that Elliott Wave target is met, probably many weeks away. So the realty index in a consolidation mode, though individual IT stocks, again, reality stocks have done really well, 30, 20, 30, 35% up. And again, excellent setups and opportunities there. So the last 1 month, July, reality has been in a consolidation phase after a nice rally in June, and August could perhaps look at another move up on the realty side, right? So that's one thing. The other one to mention, highlight for today's IMR is the pharma index making new life highs. Pharma stocks, this was mentioned again in June end, right? So again, July pharma has consolidated, and maybe August, already after last week of July and the beginning of August, we're going to see further moves on the pharma side. Like we mentioned, again in the June IMR, the ascending triangle here move, the measuring implication has more or less been met. So there's not so much, what would I say, trading value in the setup right now, but the setup is strong, and the individual stocks also are showing good strength on the pharma side. So that's another place to keep lookout on. There could be corrections because we are sort of heading into a overbought zone on the pharma. So if you're a trader, be a little cautious, but nevertheless, the opportunities are there. And then we have the media index, right? Again, this was something that we mentioned in the last IMR last week, and the media index has done well. This is the daily chart that you are seeing, and as you can see, the media index even on Friday did a nice whopping 2% up. This is on the index, right? So you just imagine. So we are talking about 2% here. This was many days before 2.5%, and this was another almost 2%. So 2, 4, 6, and in between some 7, 8. So in a week, about 8% up on the media index. And again, a long way to go. Just to re-emphasize the head and shoulder bottom, that is there on the CNX media index, and this has a good upside potential still remaining for those who want to look at anything that might be there. Okay. Now, so those were the, very quick highlights. Some surprises, I would say, in terms of sort of didn't see it coming, but it happened, is on the auto side, right? Some fantastic moves, some fantastic new life highs being made by some auto companies. And this was just in the last 2 days. And the auto index is all set, in my view, to make some uh, fresh life highs in the coming week and weeks ahead. So if you are an author enthusiast, and if you like to invest in the auto space, then definitely this is something that you could look at. And this was a fantastic move in one day for the entire auto index to go 5.6%. Oh, sorry, 1 week, right? 5.6% is quite unusual for any index. Of course, that you see here, this was at the end of the Middle East conflict of Trump and all of that. This was way back in April. 1 week, it went up 10%. Right. So big moves, you could say indexes are becoming pretty volatile themselves. So big moves. Um, you've got to have a stomach as a trader, and as an investor, you've got to ride the volatility. But the index themselves showing some nice setups that you can look at taking advantage of. Coming to probably the laggards now, there is the yes, FMCG index, which is still struggling, not showing any sign of any strength right now. As a matter of fact, it's just being beaten down. Perhaps some sort of sectoral rotation money is being taken out from FMCG and being put into all the other indices that are moving up. Definitely the smart and active traders are doing that. So the FMCG index could be on the verge of a breakout, but a little bit premature. One, two, three, four. Right, just counting the number of waves in that. Hmm. Maybe. There's a good chance, I think, better than 50-50, that in August you're going to see move on the FMCG too, right? Um, yep, yep. Technical. I'm just talking about pure technical setups. So it's like it's a laggard right now. You probably might find some sweeter setups on individual stocks on the FMCG side. So that's one place where there is a bit of caution. And then we have metals, yes, right? The metal index has been correcting, has corrected quite a bit, about 10% from its highs in May, right? And now took support on its previous life high, that blue line. I use the blue line for that. That's just my how I like to mark my charts. So that was a previous life high of the metal index from February 26, right? And we're about 6 months after that. And having taken support there for about 2 months, looking like it wants to go up. So again, you could look at the metal side for individual opportunities, though there could be some um, Mm, it's not such a strong setup as what is there in IT or media or what was the other one, reality, right? Or for that matter, even pharma. But if you're looking for something that has not yet moved substantially, then perhaps you're going to find it in the metal space and definitely in the FMCG space. Right. Coming to the infra index, this is, well, been sidewards for almost 2 years now. Really not on an index level, not showing anything significant. You already got enough, I think, good opportunities in the other indices that we have mentioned. Uh, Oil and gas, again, because of the Trump move, and oil and gas has cooled off globally. They could be good times. So there was, again, oil had gone to almost 100 or cross $100 a barrel. And now, like I said, Trump mentioned that, well, he's going to halt the bombing campaign, if he was actually going to start, that is, and that should have a cool down effect on the global energy crude oil market. And then the usual culprits are Indian oil marketing companies will have a relief rally perhaps because of that in the coming week. So look out for that. The energy index is a much more broader index with not only just oil and gas, but electricity, power generation, power transmission, and all that. Now, the ascending triangle has not yet moved up to meet its measuring implication, and there's been a consolidation happening in June, all right, or even since April, May, June. So this is weekly. So you had 1, 2, 3, 4 weeks of a nice move, and then almost 8, 9 weeks of a sideways move. This is just a corrective pattern. It's almost like a flag on a weekly chart, right? And it is possible that you're looking at the end of that and the flag, that is, and a move could rise. The big brother in all of this is Reliance Industries. So keep a watch out for that. Ending this sectoral review with Bank Nifty, right? So Bank Nifty, again, some banks have done really well. Some NBFCs have just shot up in the last 1 week. Private sector bank, it's just there. It's really doing nothing much. And the PSU banks also stuck in that symmetrical triangle, really not doing much, as you can see, right? So the banking space, yes, individual moves are there, but those are like not backed by the overall sectoral move, unlike IT, unlike pharma, unlike um, media. So the safer bet for now would definitely be, as a trader, would be not to be in the banking space unless you're stock specific. Then that's a different approach, or a more finer approach altogether. Great. So that's what this review is about. I hope it was insightful. I wanted to keep it fast because last time was just even too long for me. It was 39 minutes. I had hoped to look at. I try to keep it under half an hour or even less, 20 minutes if it's possible. But last week especially was very interesting, and this week again, like I said, technical setups are really really nice. Classical Dow theory patterns. Just before I leave, just to let folks know, and I'd like your feedback on this. If you would like to kindly get in touch, this is my information on the screen. You can WhatsApp me on the number that you have on the screen. And the question is this: there are thematic indices which NSE has introduced in the last 2, 3, 4 years. Some have good history, some do not have any history. But usually, the approach is from the sectoral side to find opportunities. The thematic indices are across sectors, but across a particular theme. For example, you have, let's say, the railway index, right, which is not doing much now, maybe forming a base, but this will have everything to do with railways, railway construction, railway laying, signaling, electrical, etc. Or you have, let's say, yes, the Indian Defense Index, right? You'll have the likes of BL, BDL, Bharat Dynamics, HAL. So from different, some Tata companies, even maybe L&T. I'm not saying that's in the index, but these are all people who play a big role. Godrej Aerospace in the Indian defense ecosystem. So like that, I mean, my question is this: so there are a lot of these thematic indices that are now available. This is just a short list: housing, healthcare, and there are many more. EV is also there, if in case you're interested, and there are many more. I just wanted to get your inputs on, like, how many of you would be interested in a review of thematic indices, not the sectoral indices, which is what popularly done, but in thematic indices. And if you are interested, I'd also like to know how you would use the thematic indices in your own approach to the markets, right? All right. So with that, thank you very much for your participation, Mokari Maka. Keep an sharp eye on the news. If Mr. Trump decides something else, then we could have a very different week. But it looks like because of local issues in the US, Trump is going to probably find a way. Like they say, he's looking for a ramp off. He wants to figure out how to exit the in question, the mess that he is in. Definitely not winning. That's for sure. Um, and if that ends, then there'd definitely be a big leg up on the market sentiment side. Though he may again put in the tariffs, and we don't know. Okay, so that's it. Short, hopefully insightful, and definitely worth tracking and following up on opportunities which are definitely there. Look forward to your feedback. Thank you very much. And hopefully we'll post. Last week we did not, but we'll post Bullion, Global, and maybe crypto or some other reviews in the maybe even today or tomorrow. Right? Thank you, Makari Maka, and have a great August ahead. Goodbye.